All right, let's dive in. 2025. Believe it or not, the last time we gathered was all the way back at the end of September, over 4 months ago, which is insane. A lot has changed since then, especially in the world beyond real estate. But, and here's where I get cheesy, folks, there's one steady anchor in all this uncertainty. It's our incredible panel of real estate experts. Yes, you are our calm, steady ship in a sea of change. How do you like that, huh? Not bad for a nice cheesy start. So, this is our 44th real estate chat we've had over the years. Please note that this call, like all the calls, are being recorded. I'll send out a recording along with the notes after the call. We usually do these every 2 or 3 months, always Thursday, always 11 a.m. Today, we're going to talk about what's happening now in the real estate in New York City, and also what the outlook is and what we think it is for 2025. So about me, my name's Phil. I'll be hosting today. I was a New York City real estate agent for about 20 years, but now I spend my time running Lease Break, a marketplace for shorter leases and lease breaks in New York City. We have about 5,000 rental listings, and this is important. Most of those listings are not on Street Easy. So I know a lot of agents that have found amazing deals on our platform. And yes, it's a free platform. You're not paying to be on the platform and to look for real estate deals for your clients. Okay, let's turn to our market discussion. So last time in September, if you remember, our panelists told us that interest rate cuts have spurred a little activity and the rental market remained solid, very strong. A lot of people were cautiously optimistic, and I'm curious what our panelists have to say today. So now we turn to our experts and our agents. First, we're lucky to have Mr. Data himself, Mr. Data expert Noah Rosenblatt with us. He is the founder of Urban Digs. Urban Digs is a data analytics platform, which also shows market insights, which many of you subscribe to. We usually start first with Noah. He gives us a good base of things from a data perspective, and then we'll turn to the agents and the managers for a more boots on the ground perspective. So, Noah, if you're ready, how are things looking in real estate, New York City real estate, from a data perspective? And if you have any thoughts on 2025, would love to hear them.
Sure. Well, first off, Phil, thank you for having me. Love being here. Fantastic group of agents here. So much wisdom here. Really looking forward to hear what these guys are saying because, percolations, Phil, percolate.
Percolations.
That's like the word of the day kind of thing in my eyes. I always like to start out and say that, I see a lot of data, right? I see a lot of data coming in from the industry, but you guys are on the field, and what you guys are seeing are about 2 weeks ahead of me, 2 to 3 weeks ahead of me. And when I say percolations, I am hearing a lot of anecdotal activity of what's going on, a lot of pipeline activity, a lot of accepted offers, a lot of contract outs, a lot of my contract's going to be signed in a couple of days, a lot of bidding war situations, a lot of packed open houses. Oh my God, everything just started getting all crazy with properly priced stuff. It seems like one of those markets that's still tricky even with all of this going on. Now, from the last time we spoke with September, right? We had a nice little recovery. I mean, back in September, we were going through this volume trap, this 2+ year period of low volume. And it was exhausting, right? We actually started to see the market recover towards the end of 2024, September, October, November. Those were good months. I feel like December and January faded that recovery, brought us down a little bit, just a little bit. And here we are now, right before the season about to start. And I'm hearing a lot of anecdotal activity. That's why I'm very curious to see what the panel has to say. You asked me to give you a couple of statistics right
Yes.
beforehand. So I want to give you those statistics that you requested. You asked me for January, what is the typical contract sign activity for January? The answer is 767 is typical for January. We came in at 710. That's what I'm talking about with that fade. December, January saw a fade. We actually had rising deal activity above seasonality for October and November, and then it just kind of faded down a little bit. So that's what I was talking about. For January supply, we were supposed to have 1,308 listings. We came in light at 1,283. Not too much light, but just a little light. Now, here we are in February. It's middle of the month, right? So I don't have full month statistics for you, but I'll tell you a couple of things. For February, we're supposed to have 941 contracts signed. That's our baseline. Right now, when I look at the 30-day trend, so I'm kind of capturing half of January and half of February, we're at 807. Given the anecdotal things I'm talking about, and I'm curious what the panel has to say, I have an interesting feeling we might either get at that 940 level or break it by the end of February, but we got 2 weeks left, so we have to wait and see. For supply, 1,356 is what we're supposed to see for February. That's our typical February average. We're at 1,330. So supply's still kind of tight.
Remind me the difference between supply and inventory, or are they the same
What
thing?
I'm talking about right
Yeah.
here is basically what monthly contract activity and monthly supply is typical for the average. When you think about active inventory, it's going to have everything, right? It's going to have listings that have been on the market for 6 months, 9 months, 10 months, 2 months, 3 months, et cetera, et cetera. Total inventory right now is about 5,600 units. It's kind of low, relatively speaking. When I talk about monthly supply, I'm talking about how many new listings are supposed to come on the market in
Ah,
February. That
gotcha.
answer is 1356.
Gotcha. The new listings that come on. Gotcha.
Correct.
Great, great. Okay, Noah, anything else? We're
I
good
have
for
I
now.
have two charts if you want to see it real
Yeah,
quick. I mean, it's
throw them
entirely I
up.
don't want to hijack. Okay. So let me
No,
show
throw
you
them
these
up.
two
Throw them up.
charts. I picked these charts specifically because I think it'll complement what the panel is going to say today and not kind of take over what they're going to say. First off, I want to show you what I'm talking about with contract activity. That's deal volume for our market. This is a 5-year look. Take a look at that blue line. Remember, I was telling you September into October and November. Those were kind of good months right there, but we've been fading a little bit. This is deal activity on a monthly basis for our market. So you can kind of see where we are. Now, what's interesting is when I overlay that orange seasonal average, that seasonal average kind of lets you know whether or not we're above or below our seasonal trend. Take a look at the last couple of months. You see how that blue line finally got above the orange? That's the recovery I was pointing out. But last month it faded back down. So it's like, all right, where do we go from here? Now, when I overlay this, guys, I just want to show you guys what we've been through. All right, take a look at the pandemic stall on the left. Take a look at the pandemic recovery that we had. Take a look at the Fed rate hike driven volume trap. Notice that blue line is below the orange line for that whole time. And then we had a recovery, like I would say late summer into the end of the year. That happened. And here we are today. You put all of that together, guys, it's still, even with all of that, it's still a challenging listing climate. And that's what this chart is. This is the last chart I'm going to show real quick, but I like this chart because it kind of contextualizes the listing environment. And take a look at that very last point. That blue line at the bottom there, that's a challenging listing environment. That green line at the top, that is an easy listing environment. It's very simple. If the bars go down, it's more challenging. If the bars goes up, it's more easy. Take a look at 10 years ago, 2013, 14, 15. That was an easy listing climate. Take a look at the whole path that we've been through over the last 15 years. Take a look at where we are now. Still challenging. So that's all I wanted to point out is that we're recovering. That recovery is fading a little bit. Anecdotally, a lot of activity, but it's still kind of tricky out there, Phil.
Thanks, Noah. That was super helpful. And I'm sure we'll have some questions later on this. And feel free, people, you could ask Noah questions at the end or throughout. So let's speak now to some of our top real estate agents and managers to get a more finger on the pulse perspective. Like Noah said, you guys are there now, and things may be a little different. And that's why Noah is so interested to see what you have to say. So, like last time, I also asked everyone to give me a number between 1 and 10, 1 being a strong buyer's market and 10 being a rager seller's market. This is to avoid, sometimes people will say, oh, it's good, it's not so good. And what does that really mean? This way, we're asking you to give us a number and we compare how the market is changing over time. So let's first hear from Mark D. Mark D, what are you seeing out there, if you don't mind? And what is your thoughts on 2025?
Well, hello, everybody. Thanks for having me. So let's see. 2020, just like Noah said, the end of 2024 was a pretty banner. That fourth quarter was pretty good. As we're going into the first quarter of 2025, I would say the number is still about 4 to 5 for the leaning into the buyers. I do see some, some definitely deals are being had and deals are being made. Not necessarily with some, the sellers are still unresolved with lowering prices. They think they still are going to, the rates had gone down for a minute and they sort of jumped on it and they want to get their price back up now. But as we all know, the rates went back up to about 7. So, who is to say what's going to happen going forward with the inflation and everything else? But right now, what I'm seeing in the market is there is a balance. There are properties that are priced well and that are moving, but on the lower end, oddly, the studios not moving so much, but the high end not doing so bad. We just listed a $6 million listing on the Upper East Side. We're doing consistent showings. We put a nice 1-bedroom on 70th and 5th, and we just got an offer on it. It's been on the market for less than 30 days. So if you price it right, as always, deals are going to happen.
All right, great. Thank you so much, Mark D. Let's move to Brian. Brian, if you don't mind talking not just about the market now in 2025, but also mention rentals, because I think your team does a decent amount of rentals as well. So it will be helpful for us to get that perspective.
Yeah, hey everybody.
You got it. Hey guys. Oh, me, Brian, or you,
Brian?
Brian?
Oh, sorry, I meant the
two.
other Brian. Yeah.
All good. Brian,
yeah.
we'll see you later, guys.
Yeah.
See you
Okay.
Thanks for having me. I also agree with what Noah and Mark said. The market is certainly segmented in that we're seeing a lot of activity with the really good inventory, and we're seeing prices fly with that inventory. Now, the inventory, well, I like to use the word pedestrian inventory, which is most of the inventory. That inventory is struggling. It's really not moving. People are trying. Noah showed that chart before, the climate index. I love that chart because it really depicts where the market is right now. And what I'm seeing out there is that is still on a decline. So we are in a challenging environment. So I'm seeing sellers that are coming back. They bought in 2014, 15, 16, and they were in this really great environment for sellers at that time. But unfortunately, they were buyers, not sellers, and they bought at the wrong time. And now they're trying to get that money back. And it's really difficult to stomach those losses. So they're not looking at the comps that agents are giving them. Be like, listen, this is the unfortunate reality. And they want to get back as much as they can. Now, eventually they realize they're going to have to lower these prices if they want to sell their property. And that's, of course, unless they're in really good neighborhoods or they're gut renovated or new development. Those are the exceptions, but those exceptions aren't that many. So you're seeing prices per square foot not get hit so hard because a lot of stuff gets taken off the market.
Thanks, Brian. Do you have any thoughts on rentals?
The rental market is strong. Even for this time of year, we're seeing a really robust rental market. I expect that to continue into the spring. I would guess that we're going to have at least as good a year as last year. With that said, it's tough for people to, even with the rental market as strong as it is, the cap rates aren't there. So you don't have the investors there to buy the product for the sales market to push up. We neither need those rentals to keep going up or the dollar to decline in order for those investors to come back.
Thank you. Thanks, Brian. Let's move on to Caroline Bass. Caroline Bass, how you doing? If you also don't mind mentioning the rental market as well. Oh, Brian, did you give me a number from 1 to 10, 1 being buyer's market, 10 being seller's market? Oh, you're on mute still, Brian. Now you're on mute. You just took it off and it went back to mute.
Sorry, guys.
Yeah,
I'd say overall about a 4. Again, yeah, I'd say like for the good properties, you got a 7 for those new development and properties that are renovated, like I spoke about before. And then for the pedestrian properties, you're kind of like at a 3. Those are tough to move. And I think Mark had said regarding the studios, yeah, that's a tough market. Studios.
Yeah. Yeah.
So it really depends on the product you have. And that's why I give the 7 and the 3.
Right. Thank you. Thanks, Brian. Okay, there's Caroline. Hey, Caroline. So yeah, if you don't mind giving us the number, but also talking a little about the rental market too, and what you're seeing now, and then if you have any thoughts on the outlook for 2025.
Hi, good morning. Yeah, so I really appreciate Noah's charts because it just gives me confidence in what I was seeing and what I was feeling in the market. And personally, myself and my team, we are seeing a lot of transactions. We're really happy the way that this year is starting. We have many contracts out. Very surprisingly, given this time of year, we're a little bit before the spring market, but we had a lot of activity in January, and we all have multiple contracts that are out in February. One just came back signed. I have 2 more that are out. And I mean, I don't know, they're cash deals. I'm not seeing a lot of people financing. I only have one person that's financing right now. I'm seeing that my buyers are really putting in pretty aggressive offers, especially if the apartments need renovation. And that's across all price points, 1 to 3 million, 3 to 7 million. So the only thing I'm not finding that has a lot of negotiation room is new developments, and maybe that's the new developments my buyers are looking at. So I would say overall, I think, I would lean towards a 4. I still think that there's a lot of room for buyers. I have noticed that there seems to be less inventory for buyers to choose from. And then for the rental market, we're seeing a lot of activity, really, really strong, multiple applications on the apartments that we're listing in December, in January. And normally these are apartments that come up in the summer, but we've had some tenants that have left. And so, I mean, I'm pleasantly surprised about that for this time of year. And so I think for the rentals, I mean, it's definitely a landlord's market still. Remains to be seen what will happen in June when things change and it goes into effect if the landlord is paying the broker, how that's going to affect the rents and how that'll affect activity. But right now, it's still, I'm seeing it's really strong.
Great, Caroline. Quick follow-up. You mentioned that you're putting in very aggressive offers with some of your buyers, which I assume you mean way below the asking price. How are the listers responding to that? Like, is it crickets? Are you getting a response? What is your general feel?
Luckily, I happen to know a lot of these people, or have had interactions with them over the last couple decades, and so I think it's all about how you present that offer and how you present your clients' financials. And these are mostly in co-ops. 70% of my business is in co-ops, so they're all really well qualified people to pass boards. And so they're being received and they're getting counters. I'm not having anybody who's not giving me a counter at all.
Okay. That's good news. That's good news. Okay, great. So Caroline, thank you very much. Let's move on to Dan Marrello. Dan, would love to hear from you, your number and your thoughts on the current market and 2025.
Great. Thanks, Phil. You said 1 is a buyer's market, right?
Correct. Yeah. 1 strong buyers, 10 strong sellers. Yeah.
Yeah. So I agree with everybody. I don't think there's a blanket answer across the market. But I would say overall, I'd give it a 6. And I would say mainly because it's inventory constrained, right? So there's not a lot of good quality product priced well for buyers to choose. You speak to agents that have listings and they're very busy right now. And I would say that we should keep an eye out for a huge additional pop in the upper end of the market. Like just speaking to a lot of agents, 35 million, 60 million. I heard 2 $60 million deals going on. I heard a potential offer over 100 million. So I think that there's a lot of stuff going on in the upper end of the market, and agree that the opposite's happening in that sort of studio 1 bedroom environment. But I would say we should be careful again. I'm also hearing that all cash, where that seemed to change a little bit towards the end of the year, like where you saw instead of 70% cash, it was probably 40 to 50% of the deals were all cash, where I think it's swinging up again. I'd say there's a lot of obviously like uncertainty in the market right now. And I'd say be careful going into this year and where the market's going to head based on that.
Great.
Inflation numbers, rates, things like that. And we need the price of eggs to come down for this market to turn around. So
yeah. Also, do you have any thoughts on the rental market? I know you also have you do a lot of business there.
Yeah, market's very tight. I mean, if you look at inventory in the rental market, I think last time I checked, there was under 5,000 units on Street Easy available in Manhattan. So super tight, but it is also February. So curious to see what happens to the market as we swing into the spring and with the Fair Act potentially taking place in June. Could be interesting, but it's certainly tight. If your rental is priced right, it is flying off the market.
Awesome. Thank you. Thanks so much, Dan. Okay, let's move to Tracie. Tracie gets to work in the Miami market also, South Florida market. So Tracie, feel free to comment on that market as well if you'd like, but would love to hear from you and your thoughts and your number too. If you're there, Tracie.
Yep. Okay.
Oh, okay.
I'm here
Great.
with you. Hey, sorry. Oh, but my video is not showing for some reason. I know that's very disappointing to Stuart Sussman. Yes, I called you out. Wow. I'm so sorry. Hang on.
Okay. I just thought there wasn't much light in the room.
I will just be this disembodied voice. Maybe you guys don't want to see me tan in my golf outfit anyway, so maybe it's for the best.
Beautiful. She's beautiful.
I'm sorry. I'm trying to start my
There
video.
you are.
Oh, am I
Good
here?
to see you.
Okay. Okay. Here I am.
Yeah.
Hi. Wow.
Hi.
Baby's first Zoom. I'm so sorry. Actually, Phil, congratulations. I did not realize we were at number 44. That's amazing.
Yeah.
And always do appreciate hearing what everyone has to say. I agree with Dan about the 6 as far as the state of the market right now. It's interesting, it's kind of like the known thing that, sure, things are super slow after Thanksgiving and really not until after Martin Luther King Jr. weekend in the middle of January. Is kind of late this year, but really even it's just now in February, I feel like things have really started to pick up. But we did list a beautifully renovated 1-bedroom with a balcony and nice views on the Upper West Side before Martin Luther King Jr. weekend. We had a tremendous response and it went into contract within 2 weeks, which has not been my experience with a number of my listings at the end of the year. Even though I found it was a very busy December. I don't know about the rest of you guys. It was an unusually busy December. And that did kind of trickle down for people who were serious buyers at the start of the new year, who really kind of jumped on something like our new 1-bedroom, which was only priced at $825. But it went at the ask, and we're now working on the board package. So it was kind of refreshing to have something at that price point go so quickly. But it comes back to right price, nice condition, that outdoor space and views. It's a good thing. Our studios also have been sitting, so hopefully that changes as we get more into the true spring part of the spring market. But there's definitely more inventory than there's been, but I still think that if and when the interest rates ever do go down in some kind of measurable amount, that hopefully we'll get some more inventory on. But yeah, that's kind of what I'm seeing these days.
Great. And then what about South Florida? And you want to talk about that at all, or?
I would love to, absolutely. So that actually, everyone here in Florida got very spoiled. We saw the COVID bump up for significantly sooner than here in New York City and for a lot longer. But then last year was a huge shock when everything really kind of slowed down, and it most definitely translated into a buyer's market, except for the super high end and the houses, more like the Coconut Grove, Coral Gables area. Things have picked up a little bit here. Rental market is still very tight here. Still not a lot of house inventory, but definitely some bargains for buyers looking for condos here.
Awesome. Okay, thank you, Tracie. Let's move on to Fred. Fred, how's it going? Love to hear from you and your number. And what do you think's going on out there?
I would say it's a 5.
Okay.
I think it just depends so much. It's so circumstantial. We have always been primarily a co-op shop, and the co-op market, in my experience, I would say probably 75% of the co-ops that come onto the market need work. And nobody wants to do work. So really the co-op market involves heavily incentivizing the buyer. And I find that I've spent a lot of 2024 beating sellers about the head and shoulders, trying to persuade them that the property is never going to trade at that property, which the last thing in the line traded for in better condition 6 years ago. And frankly, it's been our experience that when you do finally get the price lowered to where it belongs, suddenly you have activity and suddenly you have offers. So we've been pretty busy in January and the first 2 weeks of February, a lot of contracts. And what we're seeing with those contracts is that it's just all price related. And the conversations I'm having with sellers are all about trying not to be too ambitious. I have found that if the prices are right, then the buyers, I don't know if this has been true for Caroline too, but I have found that when the prices are right, the buyers aren't so aggressive. The buyers are mainly aggressive when the price is still the aspirational price. Once it gets down to being realistic, you can sell those properties even if they need work. And I mean, I just had an experience personally in the last 2 weeks in which I made a deal on a big Upper East Side co-op, which I'd had on the market for a year. And it was just a question of beating the price down to a place where it was worth it for somebody to buy it and then spend 2 years getting the plans approved and renovating. So again, I just think it's circumstantial, though I will also say, just because this is kind of going against the prevailing perspective, I had a co-op which was bought, unfortunately, in 2016, a very big apartment in a very prestigious Central Park West building. It is now priced at $5 million below what they paid before they renovated, and it still ain't trading.
Wow. Yeah, that tells you something right there. Fred, you talked a lot about pricing. Just curious, when you're talking to sellers, do you use a framework like telling them you got to go back to 2017 pricing or 2016 pricing, or like do you use a certain year that you have to go back to? It might just be helpful for those on the call.
I use a lot of Noah. I mean, Noah is my guy. But I also, I remember during the pandemic, and I have felt that the pricing at the moment is not so different from when we were just beginning to come out of the pandemic. We have not reachieved 2021 prices, that's for sure. But I tend to send people back to 2013.
Wow.
2012, 2013. You can't send them back any later than that because then they get a distorted view of the market. You know, Phil, we've seen a bunch of stuff trade at prices that were under the 2012, 2013 trade. So that's really more where I think people got to start.
That's just so unbelievable because, I'm sure a lot of agents here, we used to always tell our clients, as long as you hold for 5 to 7 years, you should be fine. And I would then say, oh, but 10 years for sure, right?
Yeah. And, one of the things that I think is so interesting, and then I promise I'll shut up, is that we basically have now an entire generation of younger buyers who have never seen that appreciation
Right.
that we promised people in the old days. So it becomes a completely different conversation when you can't say, dude, I assure you, in a decade, y'all have gained 15 to 20% on the price. Maybe you won't.
Yeah. Yeah. That's a game changer. Thank you so much, Fred. Okay, let's move on now to William Bolls, who also works the Connecticut market. So, William, feel free to give us some thoughts on the Connecticut market as well. I'd love to know your number in both the states.
All right, well, let's talk about New York first. 3.5 to 4. I was shaking my head a lot when Fred was just talking because we're all having those conversations now with prospective sellers, trying to get them to wrap their brain around. If you've bought in the last 10 years, you probably need to list for less than you bought it for. And of course, everything is depending on all the things, right? I did an interesting analysis because I had a listing presentation on the Upper West Side. The next week I had a listing presentation down, sort of where Soho meets the Village. And making the case for you got to list less. On the Upper West Side, easily found 8 properties. This is what they bought for. This is what it's in contract for. This is what it sold for, making my case. It was harder to make the case downtown, which was interesting. We know there are market nuances. That was an eye-opener for me, that the Upper West Side took more of a hit and is keeping that hit versus some downtown properties. Thank you, Fred, for yes. So right, and it takes doing the data, right? So anyway, I thought that was interesting. I think also I've heard of 2 situations where we have West Coast folks coming and looking and kicking tires because they're tired of dealing with smoke and fires and whatever. Like, I think there may be a bit of a tipping point pushing, especially those people with multiple residences. Like, maybe I need to grab something on the East Coast, right? So I've heard just within the past week. I thought that was interesting to share. Rental. So we listed
A lot of LA
rental.
people.
Yeah, exactly. We rented a listed a rental in late January that we've listed 6 times over the years. I was like, guys, brace yourself. There's snow on the ground. Anyway, of course, 5 offers, like shockingly, but then not shocking because when people aren't buying, they're renting. Like, we know that, right? New York City, that's the way that it works. So I think that was a note that I had. I think it's it because I want to keep it tight, but I got,
Great.
this is so great. Thank you, Phil.
Did you want to mention anything about
Connecticut?
Yeah, Connecticut. Anything want to?
You know what? Since 2015, we have not had this much snow cover, and it's just cold, and people are not coming up here to look at houses right now, and that's why I love that I still have my New York City business.
Right.
Where are you in Connecticut, Bill?
I'm in Litchfield County. I am.
Where?
Roxbury.
Love
I am
love that
also
area.
sitting in my house in Litchfield County.
Well, you know what? I was admiring your flannel shirt, and now it explains it all. What town, Fred?
Sharon.
All right. Well,
and I'm in Southbury. We got to do a Connecticut thing going on.
Exactly.
Speaking of winter, I know it may not be great for real estate, but I got to tell you, I'm happy that we finally have a real winter here in New York City. But anyway, okay. So thank you so much, William. Let's go on. I see Tracie shaking her head, but Tracie, you go down to Florida in the winter, so you don't even count. Okay. Anyway,
I'm fine without a winter. Trust me.
Yeah. All right. Let's move on to Scott Harris. Scott has a little bit of an announcement to make as well. And then, of course, Scott, I would love to hear your thoughts on the market.
Well, hey, Phil, it's great to be back. And I guess the big announcement, in case nobody's following email or on social, but I left my big box brokerage firm after 18 years to launch an independent real estate company, which I've called Magnetic. So I'm delighted to be bringing the service that helped my team and I sell $150 million of real estate last year to our clients and to more clients. So
you
awesome.
Poor man.
Good luck with that, Scott.
Thank
that
you.
Sounds awesome.
Yeah. So we're delighted. We're very much active in the market. It's been, busy couple, 3 weeks. If I'm talking about where the numbers, if I were giving numbers, actually, it completely depends on the size of the apartment and the condition. I wrote down, does it need work? It's a 3 in the market. It's very much a buyer's market. If it's move-in ready, it's a 6. Sellers, if it has high maintenance, it's a 3. If it's right down the lane or low maintenance, it's a 6. If it's a big apartment, it's probably a 6. If it's a small apartment, it's probably much more of like a 3. It's more commoditized. I think buyers are getting adjusted to new realities, which include mortgage rates, and they're slowly getting used to it. But I've had buyers right now looking in the $2 to $5 million range, and almost every property we reach out to has a contract out if it's in good condition. If it needs work, a lot of properties are coming off the market, and you can have a tale of two of the 3 and the 6 market in the same building. I'm selling something on Fifth Avenue, and the buyers are buying a mint condition of property. They're very happy. The seller is probably losing $1 million on the sale. There's another big unit in the building that needs work. Just went off the market. And my buyers were like, "Why did it come off the market? What's wrong?" Like, what's wrong is it needs $1.5 million of work. So, I totally agree that at the high end and certainly new developments, we closed something at 50 West 66th. Sellers aren't really negotiating in any building that's having a lot of success. And a lot of these developments are really going very well. Developers are very happy. You can see it on 77th Street on the east side with some of the Naftali developments that are cooking right now. Their 84th Street project is going great. I'm not trying to, shine a light on any particular developer, but a lot of the buildings that are well located are doing really well, and those are not negotiating on prices. But I think buyers are pretty encouraged with the prices they're seeing in general. And the only problem these days, I think, is, as Fred says, aspirational pricing and agents who are like talking their book. They just can't stop telling me that they have 6 offers and all those deals just had bad luck and fell through. Meanwhile, I'm looking at the listing that's been on the market for 500 plus days going, hey, every other listing in the building sold in 100 days. Something is wrong, and it's not bad luck. It's bad brokering. So I think agents have to really get real with their sellers. Otherwise, why not just tell a seller, if you don't want to adjust the price, like, maybe I'm not the guy for you. I think that's an honest conversation that a lot of agents are afraid to have, but they should be having.
Good advice. Thank you, Scotty. Thanks so much. And again, best of luck with the new brokerage. It sounds like a lot of work, but very rewarding and huge, huge deal. So congrats.
Yeah. People want to follow me on, they want to follow me on Instagram. I'm talking about it every day. It's fun. I'm having a blast. Thanks, Phil.
Awesome. Of course. All right. So let's move to Scotty. Scotty, let us know what's going on. I know you also do rentals downtown, so feel free to mention that, and would love to know your thoughts on what you're seeing out there.
Oh boy, let me tell you. I will say the last quarter, and then heading into the first quarter here, has been the best in a year for me, so that's good. And I'm seeing that track with what a lot of people are saying. So last quarter was definitely good. I think there was a lot of existential crisis running up before the election, and regardless of how it turned out, people were then willing to make the decision to do something. I think they just wanted to wait. Nonetheless, I think, I try to mirror what Brian was saying, because it's a tale of 2 or 3 different cities with regards to my lower price stuff. Maybe that's a 3, particularly in co-ops. The higher price stuff, anything over, 2.5 or over 2, whatever, the inventory is so low, and I deal, mostly downtown. It was just gangbusters for my Tribeca loft. It just, we just had multiple offers. It went very quickly. So that may be more of like, is around a 6. So I think 3 and 6 maybe would be about right. I'm certainly seeing a lot. I don't know if you all get the emails from other brokers like, hey, in search of, $45,000 a month rental in search of townhouse for 15 to 20 million. Like, we all get these emails all the time. It seems like there are very high net worth people that are out there looking. So I think that part of the market is fine and the inventory is still low, but the lower end is tougher. And although I think about 65 to 70% of the deals in Manhattan are all cash, at the lower end, it's, you know, a little trickier. So I'm dealing with issues with banks being a little more strict, red flagging buildings, whether it's local law 11, whether it's other issues. If they're under the Fannie Freddie guidelines, under 800 and whatever it is, 805,000. The banks, even the bankers that I'm talking to, the banks are being a little more strict on that. That is a concern, and, you know, annoyingly so. Whereas maybe they would be able to pass something through, now they're being maybe doing a little more due diligence and being a little tougher. So I've had deals that have been problematic, and they have had mortgage contingencies because of these issues. So I think that's, I don't know, it's making it difficult. I'm also worried about the kind of existential part of it, which is what could be forthcoming in 2025 if they're trying to, again, let Fannie and Freddie go back to being private and not owned by the government, in terms of the risk for banks, and if interest rates would increase because of that. Like, I'm concerned about that in terms of rates. I'm concerned about foreign investors, although a lot of California people anecdotally have called me and have decided to want to do searches here, which I think is, you know, very fascinating. In the last month alone, I'm taking out buyers from California who lived in Brooklyn, moved to Malibu a couple of years ago. Now they want to move back, understandably. So there's a lot of people, I feel like, doing that. I'm worried about foreign investors, just about the kind of tone of what's going on in the country and whether or not they actually want to put their assets here. Fortunately, we are in Manhattan, and a lot of people feel like Manhattan is safe, and it is. It's just, you know, I think, you know, people have whatever their own opinions are in their head about wanting to invest here. So I think that, and I also think the FAIR Act relative to rentals, where the burden of the broker fee is going to be put on the owners, could be very interesting for the rental market. And I think heading up to the implementation, if it does implement, I think it's June 1st or right around there, I think there may be a lot of renters who are going to be hesitant to pay a broker fee. Right now, at least downtown, they just want an apartment. So I listed an apartment at the Printing House, which is, you know, a studio loft for like $6,500. I had to take it down off of the internet because it was so busy, and it rented in 2 hours, with multiple people saying, like, if you have anything else, let me know. It's like, that's like a common downtown thing. So the rental market is definitely thriving, and the prices are definitely up there. So, you know, I'm seeing a lot of people when I'm looking for searches on the Upper East Side. There's a lot of data that I'm pulling that are showing prices paid even in 2008 at that height of the market. They're not getting that even in some of the properties, especially the ones that are now no longer as renovated as they were. And that's scary to a lot of people who are looking, like, you know, at a 2-bedroom around 1.1, and they're like, wait a minute, this should be 900,000, but they paid 1.1 in 2008. So people are like, wait, does that mean if I invest in here, it's like not ever gonna, you know, appreciate? So there's a lot of variables. And again, this city is comprised of probably about 15 different cities out there and different data and numbers. So it's fascinating what's going on. The net is that the inventory is low. And once you take out a buyer, I would say within the first 2 weeks, now you're just waiting for the next thing to pop up. And that's in a lot of the areas that I'm looking at in like downtown Brooklyn area, Boerum Hill, Carroll Gardens, Brooklyn Heights, and then also in Manhattan in the downtown areas. So that's my assessment.
You know, it makes you wonder if we're really at like 10-year lows in prices, or is this just like the ultimate all-time buyer's opportunity that we're going to be looking back 5 to 7 years from now. I don't know, but that's amazing, Scotty, that even 2008 in some cases, we haven't even been able to top some units that closed in 2008. That's amazing.
I think just one last point. Somebody mentioned looking at, I think it was Fred, maybe mentioned about looking at 2013, 2014. I think that's actually really good as well, because what I'm seeing is 2008 mirroring 2016, 2017, but those are in isolation, and the more accurate is probably around the 2013 in terms of like
right. Thank you so much, Scotty. So Brian Lewis is he still on the call? He was next. Somehow he all of a sudden jumped to the back. So Brian, you're with us? I think you're on mute,
I'm
Brian.
here, and
there you go. There you go.
Hey.
All right, Brian, and then Antonio. Sorry, Antonio. Brian was next. Somehow I don't know what happened, but he
I was in
flipped to the
transit.
end.
Now I'm in the office.
Oh,
So good to
wonderful.
see you guys. How's
Wonderful.
everybody?
Good. What do you got for us, Brian?
Show me that chart. I love that. So guys, I think it's a 6. I think it's a 6. I think you can sell Rex right now. I think you can sell beautiful big townhouses that are done to the nines. Everything's priced. That's a market. That's what we do. But it's not just the pricing, it's the marketing. You got to stand out in everything you do, because any monkey can put it on and price it, right? They want us to work. They want us to work. They want to see us sweat. That's what they're paying us for. So we tend to price with 3 things in mind. Aspirational, like, if I sell it for that price, I'm getting every listing in this building. Moderate, which is probably where you're going to land. And then let's have a bidding war. So we tend to give them the choice, and they pick their path. And if they pick the top path, we say, you're not allowed to throw us out with the bathwater, because there's going to be a day where you forget that you chose that. It always happens. It always happens. And we don't need the ding and a reputation, right? So right now we have a place that, well, let me just say this. We're getting a lot of action on Compass privates. So we have a robust private market. We're a big company. We have a lot of buyers. We have a lot of whatever. We do it. It's good. I'm showing my privates right here, and they're getting action. And I've got one right now that actually isn't even private. It's a townhouse. It's in Carnegie Hill. We failed to get 16 a couple of years ago. And we're doing a deal at 14.2. It should be signed next week. The reason I'm telling you that story is because they bought it 10 years ago and renovated it, and they paid 14. It's a great time to buy a townhouse in New York. It's like instant value, if you ask me, if you're going to stay there. And the people that I work with on the Upper West and Upper East, for the most part, are people who are going to nest for a while. Now, I know we're not supposed to demographically define our markets, but I deal with a lot of people who have big lives. That's code for family. And I find that the February market is great because they know what their bonuses are. They know what's coming. And this year's amazing bonuses. Let's face it. That's what's driving a lot of my business, bonuses. And we also know that the school letters, if you choose private school or public school, come out right now, literally right now. So I'm getting all these refugees from Tribeca and the Village and Brooklyn who are buttoning up, anchoring down, and they want to be Upper West or Upper East. They want to be there for the next 15 years. And I'm getting a lot of that. So I think that's always a market to tap into. I call it the winter market. It's like right around the Super Bowl and right before Valentine's. That's usually the window for that. And that's what we've had consistently, privately and publicly, on properties. The things that we have that are recs priced right are moving. I've got a rec on Riverside Drive. It hasn't been touched in 40 years. And we just price it right. We're above ask. I don't think people are afraid to renovate. I really don't. If it's priced right. And that's what we talked about. But I marketed the you-know-what out of it. I try to find the one thing in a property that I think that gives it character or makes it unique. And I can find the pretty and the ugly. And that's I think my magic. But I got to convince the buyer that, and then I got to convince the bank to defend what the buyer did. So it's work. And I share that with my sellers. So if I had to have a layup, like I want more, it'd be more Robert Stern new dev, 3 and 4 bedrooms, Upper East and Upper West. They sell like crack. People love it. They want fake pre-war. and they want it in a big, tall building. But the way that I sell my golden uglies is they have better locations. I've got one at the Prasada right now. Full rec, needs a 2 years of your life. We're at 6.75. There's room. The one above it, the one below it, went for 7.5 3 years ago. Same rec, same estate. People are coming. People aren't bidding. The one thing I'm hearing is that you've got a budget now, at least what these buyers are telling me. You got a budget now for the fact that now they're nervous about the contractors having teams with some of this ICE deportation stuff. I don't know. I thought they were all legal, but maybe I live in La La Land. Also, the inventory, the products that they're going to get in if these tariffs go through. So what's it going to do to the products of getting these renovation products in? So that's what drove that conversation. I heard 3 times from 3 buyers who didn't bid on the Prasada. So I told my sellers, and they dropped the price. They're based in reality. It's an estate. We just have to worry about the board not agreeing with our assertion about its market value. This year, I've also been meeting with some boards, pre-war co-ops, our good old dinosaurs that have great locations, but are becoming, I mean, I've got one at One Beekman, like full cash building. They're like built by Rockefeller. No one gives a shit. No one cares. It's a great apartment, great views. This generation of money doesn't care. So I've got to get them in there with some value and some narrative. And I'm working with the board. My owner's the treasurer. I can't say this. We're being recorded, right? Yes. All I'm saying is I can't advertise it, but they said you might be the first deal with some financing at One Beekman. So I can't tell you that will happen, but that would open up my audience tremendously because my Park Avenues suffer from it. My Beekman certainly does. My Suttons, Beekman and Sutton, total value play. You got folks that love the River Club and the new Promenade, value play. And I think I've talked a lot. Did I cover it? Private as bonuses. Yeah, I'm telling people to list right now. List now. Not a lot of inventory out there. Spring market, you're in it. Let's go. Do we really think it's going to get a lot better? I hope. I only know today. And I think that we need good inventory that's well priced. And that's what I say. My number is 6. My number is 6. We don't have any rentals right now that I'm aware of. Oh, we're about to get one. We're going to price it right. Hopefully it moves. Oh, we did the deal. Ryan Garson did the deal with my colleague, Kendall, who's now moved on, but she really did it at the Baccarat. We got $100,000 from Floyd Mayweather per month for a place that was overpriced and just sitting, and he bid. And so we have a tenant in there, and the owner's very happy. Ryan really did the heavy lifting on that, and but we marketed that thing for sale for a long time. We had the cast of Emily in Paris in there. We've had influencers in there. We've had events, but that was a highlight of one of the highlights of last year. 2024 sucked, but we had good sucky. Our group, we did okay. I think 2025's already started out way better. I'm not hearing any bitching about interest rates. Are you guys? No. It's like, oh, 7 sucks. Okay. But you got to price in for that because they may not be vocalizing it, but if I do hear it, I say, well, how's your portfolio? Your equities are up 30%. So let's talk about that. Mm-hmm. That's my little thing. So
awesome.
All right.
Thank you so much, Brian. One thing you said I just want to highlight for those agents out there that are taking listings that they know is overpriced. I love what you said in the beginning, that you basically tell the owner, I'm taking this listing. It's likely overpriced, but remember this 6 months later and you can't fire me, because I mean, that is a big fear, right? That agents have. So I just love that.
I've actually had them sign 12 or more months of exclusive. I said, I really don't want to be in your life that long, and you don't want me in your life that long. But I don't want you to go to a cocktail party and say, Lewis couldn't move it. I don't know. Because they will never say, I gave him a shitty price.
Right, exactly.
They will never say that.
Exactly.
But this morning, Noah, I literally channel you. I said, the price of admission for an overpriced property has never been more punitive so quickly. You will be punished. You will never get what you deserve. And overpricing even for 2 or 3 weeks can kill you. And if you're not a unique property. Everyone thinks they have a unique property, right? My kid's the smartest. My kid's the most beautiful. And that's good, self-esteem. But if you're not an exotic property, and there's a lot of people that would love you if you were priced right, you're in la la land. And time on market is never a badge of honor. No one goes to a party and says, I've been on for 2 years.
Brian, we actually have a chart that visualizes, and Fred, this was clearly a long time ago. Clearly requested this chart like 7 years ago, and we built it, and we called it.
You
Price
debuted it
Right.
last week, right?
Yeah. Price right, price penalty, price wrong, price right, kind of a thing. And I think it's like 9 or 10% if you don't sell in the first 60 days, if you're 120 days or more, and it's like 1%. If you get a deal in the first 60 days, it's like 1% negotiability, something like that. It's crazy.
Yeah. Awesome.
I'll
All
just
right.
leave with this. Fred, love the beard. Love it. And I love Fred. Anyway, I love Noah. Love all you guys. Phil, thank you. Thank you.
Of course. Thank you so much, Brian. All right, Antonio, last but not least, of course.
Hello, everybody.
What are your thoughts?
I'll jump right into the numbers. I think I was at 6 in the fall. I'm down at 5. And the first thing I want to say is I love bidding wars, whether on the seller side or on the buyer side, because I do think this is neither a seller's market or a buyer's market. It's a broker's market. This is when we are needed the most with the research and go, okay, we need to go at this price, whether you're on the seller side or the buyer side. And as you guys know, there are now buyers willing to pass on their side of the commission, although it's still above 90% who are the sellers who are paying both sides. I think the biggest thing that we had a board rejection. I haven't had that for a long time, as you all know. We're 70% co-ops here in New York, and I'd love to hear what you guys think. But I really think the buyer having $2 million in crypto did not help. I think that is now we're starting to see that that's a negative on the buyer, and everything else that you're all saying, I agree with, and with the pattern what you're all saying, I'll say this. I do think the reason why the rental market is at 8 or 9 even. We've been doing that a lot. So I'm not a rental guy, but we've been doing that a lot, my team and I. 22 years. Fred, by the way, 50 years. Oh my goodness. When I saw that on the text chat, I was like, I am humbled. I'm not worthy.
45 years. He's not quite 50 years yet.
I'm sorry.
Let's not push it. Let's not push it.
Oh, that's right. Phil said we're here for Fred's 50. That's right. Okay, I remember now. I'm getting up there too. I don't remember as well. But the big thing is, I think
it's really more pathetic than anything else.
No, it's not. No, I'll be doing this till I die. But I think the reason why the people are renting more at the ridiculous prices, we just rented a 1-bedroom for such a high price, and I said they each make $300,000. This couple, why don't they buy? It's because they're not going to see the return. They see that, right? I think Fred was the one who said that. So I think we need to make a case that it's no longer about 10 years, right? If you're going to live somewhere, which some people do, 20 years, 30 years. I have properties that I own that's over 30 years. I think that's when you make a return. But it's also freedom. It's also not just appreciation, but the tax deductibility, and also the safety of owning your own property and having a say in your fate. So that's my piece, and I know we're at noon, so I'll keep it short. And it's like going home every time I'm with you guys. Great to see your faces, even over Zoom.
So listen, does anyone have any thoughts? I have not been monitoring the chat at all. I don't know if anything came up that you guys want to mention or anything you want to talk. Go ahead, Brian. I see you. I'm going to look for hands raised. Go ahead, Brian.
Oh, good. Yeah. I started a thought and I didn't finish it. I have been meeting with co-op boards maybe 5 times last year about how to stay relevant. How to keep the values in our building up. And you talk about amenities, if there's the availability of a roof deck. And 505 West End Avenue, great roof deck now, amazing gym. The board is open to hearing ideas and thoughts around, not officially, but maybe some renting, occasionally. beyond the normal 2 out of 5 if we like you. Like, you have to, if you know who has the money for the next generation and you want it in your pocket, and your fiduciary responsibility is to keep your share values up and stay out of court, then you better change. Otherwise, you're just going to become a caveman. And that Wall Street Journal property, whoever put that on there, is great. We are now, with all of our co-op buyers, we're saying, how close are you to the board? Do you know anyone? Do you have an ally? And we go for it. We ask questions. I've got a board president now that calls me. He's like, we don't want to be the building that brokers hate. Because I always think we should have like a building Yelp page, like broker to broker, like, and the consumers may be seeing it. Like what we think working there. What is this undervalued? Is it a nightmare building?
Such a great idea. It's like the
they could do the
Facebook
same
for
to
brokers.
us. They could flip it. they could, but people are only going to say, the crap things as they all do in these.
It would have to be anonymous, I'm assuming.
I guess, or maybe, yeah, really. But anyway, I just feel like co-op board, somebody asked a question about, the boards. The smart boards are opening up. They're not becoming super open to everything, but they're open to conversations. More creative financing.
Say, on that note,
Oh, you froze.
I think you froze, Fred, for a second there.
45 years will do that. You just yeah.
Holding that note for a long time.
Well, before he comes back, I do want to tell you guys there's an event. I'm part of NYRAC. I'm on the board, but there's an event February 27th. It's the city of Yes. I mean, the big thing about New York is about affordability. So we're going to have an interview with Daniel Garodnick, who is the New York City's Planning Commission. I can have 2 guests, so message me. I'm easy to find. Brown Hair Stevens, Antonio Del Rosario. Would love to have you guys there.
Great. Thank you, Antonio. Fred's still frozen. Anyone else have anything to say? Just raise your hand. I'm looking to see if I see anyone else. I see no.
What was that date, or can you put that info in the chat? Maybe?
Yeah, put it in the chat, Antonio, if you could.
I'll do it right now. Sure.
Sure. Anything else from anyone? I'm looking to see if anyone has any thoughts. Go ahead, Scotty. Yep.
Question. And it could be based on what you're hearing or that you actually have in your pipeline to any of the brokers here. But what are we seeing for the spring? Do you guys have stuff in the pipeline in terms of inventory, or are we hearing from other brokers about potential inventory that is coming up? Because I want a nice, healthy, robust spring at all price levels in all neighborhoods. Can we make that happen?
Well, because you asked, Scotty, absolutely.
Go ahead, Mark. I saw your hand raised.
No, I was just
Mark
going to
D.
say that we're, as far as the spring is concerned, I mean, Richard and I are putting on probably 3 or 4 new properties over the next couple of weeks. So, I think and we're getting referrals constantly about, we're pitching a lot of people to come on the market in the hopes that I think a lot of sellers are, thinking that the spring market, and just like Brian said, the bonuses are coming out. Let's see what happens. I mean, listen, it's always, like we say, it's always in the moment, but if it's priced right, even if it needs work, it will sell. But the thing is to getting the sellers head wrapped around pricing it correctly.
Yep.
We have a lot of privates that are gonna maybe go public.
Hold on, Trace. Go ahead, Brian. Yep.
I'm sorry. They're private now, and some of them are aspirational privates, like they get it out of their system privately. And we show it with Compass agents. And frankly, if you guys call me, I can show you my private.
Show you some overpriced privates. Do you want to see
some of them are.
We got to talk about that Compass privates.
Some of them between the crack and the privates. Brian's got it all.
But it's a big deal where we are, and I'm pushing it because it's very effective. And then they can get that out of their system, and then come April, public and the right price. Like, how many private showings did you get? 5. Everybody said good luck with that price. Okay, got that out of my system. No one saw it. No days on market. Now let's go.
Right. No, that's great.
I find that very effective.
Very effective. I love that. Tracy, go ahead.
I was just going to say, I'm feeling a ton of optimism, and I feel that it's not just shared by me, it's shared by other agents, it's shared by the market. There has been a great increase in activity, and I just feel that everyone is optimistic for 2025. So to answer your question, Scotty, yes, we do have some listings from our team that are going to be coming on in the coming months as well. And we've listed more in this last month than we have, you know, in a month before, and in a couple of years, actually. So I'm feeling good things. And it really is almost inconceivable to me, like what someone said earlier, that no one seems to be really even talking about interest rates anymore. Like they are what they are. We've accepted it. We're moving on. They're, oh, I can't buy because it's 7%, which is a really interesting thing.
Yeah. No, thanks, Tracie. No, I see your hand raised. Go ahead.
Yeah, I just wanted to, you know, one thing that I think really came through from a lot of the agents' consensus was that this market hasn't done anything in like 10 years, right? Like the lost decade kind of a thing. I feel like this market has been suppressed for a long, long time. And I also feel like this market since the pandemic has not been operating at full capacity. We talked about that. And I feel like now that the election's over, I feel like uncertainty has gone down on that level. So some buyers have come back and are making decisions. I think with rates, I think uncertainty is coming down with rates. I think buyers are getting normalized to rates. You already heard a couple of people here talking about it. Buyers don't care about rates anymore. It's been a long enough period of time that they're getting normalized to this. They're going to make their decision as opposed to not making the decision. I know offices are starting to get more people back in. We are a vertical market. You know, there was talk of like sell suburban, buy vertical, right? Contrarian, buy low, sell high. And again, I feel like this market didn't do a thing in 10 years. And I feel like we could be setting up. We mentioned 2012, 2013. That's what it feels like to us at Urban Digs. It feels like, remember 2013, 14, 15? It feels like 2012 heading into 2013 right now to us. So, you know, I don't want to be...
Your mouth to God's ears.
Yeah,
no,
I don't want to be a poly. The only thing we got to worry about is that inventory, right? You know, it's hard to have a lot of high volume with tight inventory like it was in 13, 14, 15. But I feel like we're going to potentially bust out of this suppression, and you might see this market make a move, barring any macro or economic recession element hitting from the outside.
Great. Great thoughts.
Hey, Phil, before my computer cratered, I was about to say one quick thing, which was I just did a deal for a lot of money in a fancy Upper East Side building, which allows 25% financing. And we went to them and said, will you consider 50%? And they said, yes, we will consider 50%. So my buyers applied with 50%. The board considered the 50%. They rejected it, even though they had told him that he should apply with 50%. And so we are now doing the deal with the buyer having renegotiated the price $400,000. So that just goes to show what it means to a seller to have a stupid financing rule basically controlled by two old ladies in the building who think borrowing money lacks class.
Yes, thank you, Fred. And as to Brian's point, like the co-op boards have to change with the times, right? So,
can I
all right,
highlight
guys.
one more thing without getting too political? Here we go.
Brian,
10 years
Brian,
ago,
let me
right?
ask you a question.
10
Brian,
years, 10 years, 10 years.
Are you getting licensed in Canada for the 51st state?
I'm not going now. My brother works at the White House. He's a Secret Service agent. So
oh, wow.
He's Obama's guy too. And so, and Biden's. So he does the office. But it's been 10 years, maybe 13, 12 since Michael Bloomberg was our mayor. We need leadership. Mm-hmm. Now, we had a pandemic. We've had some crazy shit happen, but New York needs good, common sense, business friendly leadership. That is it. I'm interested in maybe somebody talking about how to lower taxes for the business people. Why should we allow Florida to become the new Wall Street? Why is that happening on our watch?
Mm-hmm. Well, that was there, but
you see what I'm saying?
You know
what I'm saying?
Are you running for mayor? Is this the thing?
Listen,
are you announcing?
I would list a bunch of websites and things I've done in my life that I'm just going to tell you I did this. So if you hate me now. But literally, business you can be pro business without being horrible.
An asshole.
Yeah. Yes. Yes. It's not one or the other. You can respect authority without defunding people. Like I'm a Caucasian male, so it's easy for me to say that. I'm just
Brian
saying,
Lewis for mayor.
you
Yes.
can be all the things in this city. You got to love it, and you got to work with it, and you've got to bring them back, give them tax breaks, and they'll spend money.
Can we just
Everybody wants
say
free shit,
you
but they
can
don't want to pay.
respect authority up to a point?
Can I mention something also? Yeah, the Adams was taking questions from reporters yesterday while getting his eyebrows threaded. So I think it's a goal at this point. And I would like to have some, kind of like normalcy in this city where just like, we can conduct business, we can make housing more affordable for people, we can treat people with dignity and respect and get fundamentals going again. New York has the highest GDP of any city in the world, almost by twofold. So we are not going anywhere. If you look, no offense to Florida, but if you take the first 40 cities and towns in Florida, they will equal the population and GDP of New York City alone. So we are not going anywhere. New York is where business is done, and a healthy New York means a healthy America. I'm just going to leave with that. God bless.
Love it.
Love it. Love
All
it,
right.
Scotty.
Scotty, let's not forget Florida is sinking.
Is sinking?
It's a swamp.
All right.
It is. It's going to end up underwater.
Oh,
All those people with waterfront homes in Miami Beach, they're
Tracie.
doomed, man.
well, we're at sea level too.
I think it's time to call
Yeah,
the chat
but we're
now, right,
not
Phil?
built
Yeah,
on
we're getting close.
limestone,
All right.
Brian.
I
But
want
Brian,
you have
we're
a good
not built
10. I
on
love your 10,
limestone.
Tracy.
All right,
me-
guys.
True.
We'll get
Phil, sorry.
Love you guys.
last thing from
One
Scotty.
plug.
Yeah, make it good, Scotty. Make it good.
Because we talk a lot about Manhattan and sometimes Brooklyn. Like, people can move to great parts of Queens and actually pay much less in a sale than they would for a rental. Right. Train accessible. Like, Queens is amazing. I don't even do business there.
Yes.
I am bullish on Queens. I am bullish of certain parts of Brooklyn. And I'm bullish on the Upper East Side and Midtown East. Goodness gracious. That's
awesome.
We just sold a townhouse in
right.
Queens. It's a great deal there. It's a lot of great deals.
All right, guys. This was, as always, an amazing discussion. If you're on the call, I'm going to send out a summary to everybody who's listening so you can send it out to your clients. As I always say, plagiarize whatever you want. Don't even use my name or anyone's name or it doesn't matter. I want you to use this content. If it gives you a reason to reach out to your clients, that's awesome. That's what I'm trying to do here. And that's what we're all trying to do. And obviously this can't happen without this amazing panel. Thank you all so much. This is nothing without you guys. So thanks to everyone on the call and in the audience. And if you have any feedback, just email me so we can make this better. And I love you guys. Feel free to say goodbye. And
Love
until
you.
next
Happy
time.
Valentine's
Day.
Bye. See you later. It's good to see everyone.
Let's do a bunch of
Bye.
deals. Bunch of deals.
Bye.
Phil.
Thanks, Phil.
Of course. Love you guys. Bye.
Bye.
Bye.